bonds have become a really attractive investment for me. They produce a high yield and it's good diversification against stocks, which I believe have had a great year. I love my stocks, but I believe that stocks will likely go down in the second half of 2023. I'm Victor, and I'm an active value investor. I do a lot of homework on my investments, and I like sharing that homework on YouTube in the form of this video. I have an MBA, a lot of business experience, and I've been investing in bonds for some time. Let me get into the reasons why I invest in bonds. I've been investing more heavily over the last year because interest rates have risen and yields have become really attractive on bonds. Let me go over my investing plan and share with you some of the bonds that I've bought, the reasons for it, and what I expect as a return from those bonds. It's been a fun year to invest in stocks. Most of my portfolio is in stocks, and it's great that the S&P, which I compare against, is up 17.78%. It's been an excellent first 6.5 months of the year. But do I expect that to continue just in a nice linear fashion? No, it would be foolish. Just in the current year, you could see that there's been some up and down movement, especially right after January. We had probably a 2% pullback, maybe 3% pullback. And I expect pullbacks in the second half of this year. Another way I would put it is if we're on the current rate of 17.78 and I annualize that, divide by 6.5, multiply times 12, I get to an annualized rate of 32.8. It would be awesome if we had a year in the S&P of 32.8. I have lots of stocks and I will celebrate that, but it's highly unlikely. Only 2 years in the last 20 have we seen returns on the S&P that would be at 32.8% or higher. In many cases, we have down years, we have pretty low years, some average years, and just recently in 2022, we were down 18%. So the not too distant, past should tell us that, hey, what goes up will come down, and you'll see some volatility. That said, I'm looking for, okay, how can I protect some of those big gains that I've had this year? I've pulled back on my stocks just a bit, and I have some cash. So how can I put that cash to good use? So in the last 5 years, we've seen a pandemic, which really affected the whole world, and it really affected interest rates. Before the pandemic, they were fairly low. Bonds were not very attractive. And then they got down to just about zero. So bonds were just pretty much not investable. And I did not have any bonds in this period. I did not have any bonds in this period. And they were just pretty much, why would you want to sign up for 2% return? That's just completely admitting defeat. But right when they started increasing rates, the Federal Reserve just went on a tear with interest rates. It drove some banks to go bankrupt. It really affected many things. And one thing it affected was the yield on bonds. So bonds went from, hey, the best bond out there can earn you 2% to the best bond out there can make you 10 to 15 to 20%, depending on the risk level that you're willing to sign up for. So, the yields on bonds became far more attractive because you can make lots more money on a bond. Collectively, my stocks and bonds have been doing great, above 30% year to date. And I have a dividend yield on all my invested money of 3.8%, which is really good. I get an income while my overall assets increase in value. That's great. That's my goal. And if you were to look at how it's broken out, I have 62% of my money tied up in stocks, invested in stocks. I have 27% in bonds, and I have 11% in cash. So majority of my investments are in stocks, and a good portion is in bonds, and I continue to add to that. A couple of things I would put out there is I sold a good portion of my stocks in the last 30 days. I'm taking profits. I'm locking in gains. And you can see another video on my channel where I share, some of the stocks that I sold. And some of those gains I wanted to lock in for 2023, and they've increased my cash level. The other thing I'd put out there is 34% of the bonds that I own, of this 27%, is going to be redeemed within 1 year. In essence, in a year from now, about 13.5% is going to move from bonds over to cash. So I'll end up with roughly 24% of this portfolio will have cash. If you didn't change anything else within a year, I'm going to do lots of things. I'm going to buy additional shares. I'm going to sell shares. I'm going to buy bonds and so forth. So it just goes to show that I'm not, buying into bonds forever. I'm just really trying to get a greater return and, really take this market, get some of those gains on stocks and do something with that money that's going to be productive for 2023 and see what 2024 has in store for us investors and make the best investing decisions in 2024 with some fresh cash that comes out of my bonds. Here's a list of the bonds that I own. Bell South, yield of 6.19%. It yields a nice above market yield and you'll have a term of 5 years. So nice, boring industry, low risk, and I get paid a 6.19% yield. It beats any dividend that I could sign up for. That would be a dividend with a low risk company. Next one, Comerica, a bank with 6.39 with a term of 3 years. General Motors has a term of 3 years, pays 5.76. Getting up on the yield curve, this is a bond with Petróleos Mexicanos, and it yields almost 11%, 7-year term. So I'm signing up to make 11% for 7 years. And the Mexican economy continues to improve. Actually, the peso has been gaining value against the dollar. So a lot of good things are happening down in Mexico, and it gives me good diversification down in Mexico. The ETFs. So ETFs are easy to get in, easy to get out. And the Vanguard long value, meaning they buy long-term bonds, mostly US issued bonds, it has a yield of 4.84 with very nice yield, beats money market accounts, and you can lock in that rate of return at the current price. The Vanguard Intermediate Bond Fund, it has a yield of 4.60 currently. So I can get in and out of these fairly easy. They are very marketable. I could, on Monday morning, sell them all or buy some more, very easy. Bonds are a little harder to get out of. You would actually take your bonds, put them in the market, and try to sell them at a price. And but I don't plan on selling these bonds. I plan to keep them and get that yield. My goal is to really gain interest income and beat money market accounts. And you could also lock in with interest rates expected to drop. You can lock in the rates, lock in these higher rates. And as rates fall, the bond values are going to go up. So I'm going to win 2 ways. And I get to diversify away from stocks. Again, not here to convince you the stock market, is going to go down in the second half of 2023. But I'm just looking at it, expecting or just saying the probability of the market either going flat or even going down is fairly realistic in the second half of 2023. Hey, thank you for watching. I hope you enjoyed the video on bonds and you found it interesting. Keep in mind, this is not investment advice. I'm not recommending that you buy any of the bonds that I covered or any stocks or any investment decisions you make. Please weigh them carefully. This is not investment advice. It's just for entertainment purposes only. Hope you enjoyed it and good luck investing in 2023.